Hello everyone, welcome to Nimbus Capital Stock Analysis. Today the stock that we are going to be looking at is Wilmar International. So let's look at why we are looking at this particular stock. So for those who missed the previous video on Singapore market update, the video was sent out actually yesterday. So go to my YouTube videos, my YouTube channel, Nimbus Capital YouTube channel, to look for this 5th October top 21 Singapore market update. So in this particular video, I explained or sort of went through how in current market condition, the industry that is moving up is actually the agriculture, the mining, and the oil and gas industry. So for some reason, these are the industry that is currently moving. So you almost every other sector now is kind of like taking a rest, but these are the few counters that have been moving. So it is quite apparent from our Singapore scanner today. So if you have been a follower of Nimbus Capital, you will notice that we send out scanner every day, a scanner result to see what are the counters that are moving and what are the good counters that you are available for you to trade. So you can see that for today, right, similarly like what I mentioned yesterday, for today, we have all these environmental commodity, agricultural, coal, mining, all these counter popping up, and it has been a trend for quite some time. So we have the crude palm oil counters such as First Resources going up, massive gain today. We also have golden energy, which is more on the energy industry, also going up extremely well. So we actually hit our TP level for one of our trade setup on golden energy. So we also have on the golden agri resources and the other one was Bumitama agri resources. So we actually have all these counter. You can see there are some movement coming in. So in view that we have all these agriculture counters are starting to move, right? One counter, of course, that has been missing from this particular list is Wilmar International. So I decided to go and take a look at Wilmar manually because it wasn't showing up on my scanner. And when I look at it, right, it does seems that price is kind of bottoming out. So let us take a look at this counter in a much more detailed manner. So whenever I look at a counter like this, right, I like to go into the monthly time frame first, the monthly time frame, to see where are all the major resistance that we are looking at. So previously we have a major resistance somewhere here, which is of course why we kind of like face a selling somewhere around here. And this whole portion here, this whole section here, it has been a extremely long consolidation that has taken place all the way from 2013 until 2020. And even then when the price broke out from this resistance here, right, it does kind of whip everyone out in a very, I would say, in an asshole manner. It's like they will not want to ensure that you are not in this trade before it decide to rally up to about $5.50. So I believe a lot of people were caught by this so-called breakout trade, and then then the price went down before it start to go back up. So it does, I would say it is quite reasonable why price will make this move, because it has been consolidating for so long, right? Do remember we are looking at a monthly time frame. So because of the fact that it has been consolidating for over 7 years, and you have to kind of wonder how many people are still holding on to it, how many weak seller are still holding on to this particular counter. So you kind of want to ensure that there is no weak seller, weak holder in this counter before market decide to go up. Hence this little move happen, and of course it is because of this move that market was able to go up higher lah. Because you have to understand that before this 7 months worth of consolidation, right, price were at like the all-time high area from $5 all the way until $7 like that, meaning there are probably a lot of people stuck here who are still holding on to this, holding on to Wilmar. And if all these people who are stuck there, they does not let go, right, price will actually have a hard time moving up, because there's a lot of supply that is lurking around in this $5 to $7 zone. So because it has consolidated for a very long time, and there's already one whipsaw move happens to double check that there's no longer any weak holder involved, right? I do strongly believe that going forward, we will not see this kind of dickish move again lah. I will say it's a very dick move lah. Pardon my language. So what are we looking here right now? We are actually looking at a very crucial level. So previously, so now we seen the counter on a monthly level, right? Let's kind of move down to the weekly level. So when we move down to the weekly level, we kind of see this particular, the so-called the fake breakout lah. We have the resistance here. We have a very clear-cut resistance here, and we have that fake breakout here before this whipsaw move come about. And after that, when price went up, when price rally up, right, this resistance level, it is retested as a support. It is now retested as support. So this support here has been established. This support here has been established because it is already retested and go up. So right now, price is actually coming back down to this support, and that is where we are starting to see a bit of bullish candle coming in. So if you look at the price movement today, right, we see almost a 5% movement in Wilmar. So now let's go back down to daily. So let me draw this line first. Let me draw this resistance first. And okay, let's draw one here and another one here. So when we are dealing with charts, right, sometimes you cannot just draw one line and then say that that's a resistance or that's a support, because price tend to move in an area, so you can't really expect the price to just like touch one single point and then bounce off like that. It hardly happens. So we kind of want to give ourselves a little margin of error. So let's take a look at this whole area as resistance turn support. Okay, so from 3.9 to 4.0, this area here. So during this entire session, we have price starting to move now, and it is only today that we are able to see some kind of substantial increase in price. In fact, you see that price have kind of consolidated here a bit. It has been sideways a bit for about since mid-August until now October, so about a few months. And after it consolidated for a while, right, it does kind of break out a bit here. It does kind of break through this little portion here. So it is safer to say that now maybe highly probable this is now a support. So let's say if we are currently at this point, right? Let's say if we are still currently at this point, it's a bit risky to say this is a support, because you can see that price is still going down. So if you blindly buy in when the price is in this state, right, it can just go further down and then you see your support being broken, because when a price is going downtrend, right, so you can see that we are in a midterm downtrend. When the price is going down, it can easily break the support. So you want to see some form of a small consolidation or a bullish candle to let you know that, hey, this support is established now. There are buyer here, which is why price is rebounding off the support right now. And it is through today's candle that we can kind of confirm that price have rebounded off this support. Okay, so when we are looking at it, we see some consolidation here. Let me repeat, we see some consolidation here, and now price shoots up. So previously, we do see similar consolidation happening here. But in this case, you don't see a price going up like that. You see a sudden drop in the price. And even here, we see price dropping. So in all the past consolidation during this down move, we do not see a bullish movement in price. It has always been in a down move. And it is only until now that we are seeing this little bullish price movement. And it kind of align with what we are seeing in other agricultural stock also. So things are going hand in hand. This is not just Wilmar alone seeing increase in price. So from here, what we can kind of safely assume is that the agricultural team is in play for some reason. What's the reason? We don't know. We don't care because we are trader. We are not agricultural expert. We don't need to pretend to be knowledgeable in things that we are not. So as trader, let's just look at what we have. We have data and we have charts. So we place our trade ideas, trade setup based on what we know, which is chart reading. So as I mentioned, right, because currently now point number one, we have agricultural team in play, which is evident from other agriculture-based counters that are moving up. And I believe we also have seen a lot of soft commodity price. They are recovering also. So in a way, right, we are in a stage, we are in this stage where we see all the commodities kind of like going up. Well, we have coal, iron, wheat, soil, corn. So all these commodities are recovering, and of course, together with this commodity, right, all the commodity-based companies, they are kind of recovering also. So not only that, once again, point number two, we are at a very crucial support level, very, very crucial support level, which is around 3.9 to 4.0. Okay, so what can we proceed to do from here? So do you just go in, throw your entire life saving inside this counter, buy it, and then just hope that things continues to go up? Not really, not really. You do need to plan a bit. You do need to work out your risk management a bit. And when we are looking at stop loss, right? When we are looking at stop loss, the first thing first is, of course, you need to know where to place your stop loss. And please don't be that guy who go and place your stop loss like here. That is very, very stingy. If you do this kind of stop loss placement, right, what is going to happen is that price can just come down and then hit your stop loss, consolidate a bit, and then start to go up. You do not want to place your stop loss like right at the support level. So as I mentioned, support and resistance, they are not just one price level. They are a area. Price move in the area. You do want to give yourself a little bit of margin of error. So we will take this entire area as a support, meaning you want your stop loss to go below this level. So I would say probably somewhere around 3.8. But since we are very, very near this consolidation here, right? Since we are kind of like quite near this consolidation also, this portion that we are seeing, it will be good to also go below that consolidation level. So let's say we can place our stop loss at 3.0. So now we have a good margin of error, a good safe stop loss. And if we look at this particular stop loss, right, it is about 14% down. So it's not really very, very wide. Also, as a stock trader, right, you do need to be able to stomach at least about 10% minimum 10% drawdown in your stock price movement. Price can actually whipsaw 5-6% without much. So in this case, you see that Wilmar actually went up 4.8%, which is close to 5%. So price can actually move that much within one day. So you want to give yourself some leeway, some margin of error. And not only that, we can also look at other kind possible scenario that could have happened. So for example, just now we mentioned that our resistance could be like something like this around this area. So there is a good chance that price might not just shoot up from here. There is a good chance that price can actually come down into this level, consolidate some more, and then start to go up. So we do need to factor in this scenario also. So as a trader, right, how do you go about taking advantage of this possibility? Number one, you can actually divide your trade into two portions. One portion you can probably enter here at the current price, and the next portion you can probably wait for a retracement, so you have an average down. So you will be averaging down here. So in this case, right, we are already planning for an average down even before we enter the trade lah. So we can plan for it. By planning for it, maybe you want to work out what is the risk that you will be taking from here to your stop loss, and from your second entry to your stop loss, and make sure that the risk here and the risk here, right, it is something that you can stomach. Make sure you are not risking like your entire life saving or what. I usually recommend about 3 to 4% risk per trade lah. So in this case, maybe since both this position are on the same counter, you might want to split your risk into half also. For example, you can risk 2% of your portfolio here. You can risk another 2% of your portfolio here. Of course, with all these trade plan in place, right, it is your duty as a trader to follow your trade plan. You don't go and plan all these, and then when the price actually moved down by a bit, you got scared and then you just run with your money. That's not a trade plan. That is a emotional action. And if you are doing that kind of thing, what for are you planning a trade in the first place? So make sure that once you plan out your trade, right, you are able to follow through. If you have difficulty following through your trade plan, then it is a sign that you do not trust your system. Perhaps you do not trust me, you do not trust my analysis. So the thing that you need to do is to do some back testing and do some forward testing. And by doing back testing and forward testing, right, you are able to see how your trading strategy perform, and you will have that confidence whenever you take the trade. And of course, if you are in my Patreon, you will know that I do a lot of back testing, and a lot of my trade setup, they are backed up by data. They are backed up by data. So if you subscribe to our Patreon, which you will find it in the description, right, you will see that we actually keep tracks of all our trade. And not only we keep tracks of all our trades, we also keep track of the statistic of our trades. So you can see that these are actually can be considered back testing or forward testing, however you want to put it. But we do keep track of all the statistics. So we have closed 109 trades for the year 2021. And of the 109 trade closed, right, we have 67.9 winning rate. And our risk reward ratio is about 1.13, which give us a normalized expectancy value of 0.45. So if I have the confidence that in my past 109 trades, I can achieve this result, then I will be very confident with taking this particular trade, because I am entering my trade with the same setup and the same system. So of course, in order for you to build your own confidence, you do need to do this kind of data gathering, trade journal, and back testing, forward testing. You do need to do it by yourself lah. Of course, if you do not wish to do it, you can always subscribe to our Patreon to get trade setup. And these trade setup, we Nimbus Capital have already done all the back testing and forward testing, and the data is there for you. You just simply need to follow the level. Okay, so let's continue. Since we already know our entry plan and our risk, right, where do we want to place our profit? So profit is a little bit more tricky. So we can take a look at the previous level. We can take a look at the previous resistance level. Definitely, the best profit that we can have is, of course, somewhere here. We do want to hope for the fact that at least it can retest that level lah. But Another profit level that we can look at is, of course, the intermediate. So we have a resistance here, and previously there was a consolidation here. So we can have a good chance that price may get resisted here also. So profit taking is kind of a little tricky to go through within one stock analysis session. But if you ask me, the profit level that I will be looking at is definitely the previous high, So this is actually the main wave. Within the main wave, there are small waves happening here. So when I'm looking at the profit level, right, I'm looking at the main wave resistance. I'm not looking at the little small wave resistance. So this is a bit of Elliott wave also, but it's not really like the full-fledged Elliott wave. I have dabbled in Elliott wave, and the result is not very promising. It is quite good, but in terms of effort to reward ratio, right, it's not really worth it, because in order to learn Elliott wave, there's a lot of memorizing you have to do, and the kind of result that you get is still very close to what you can get with a simple support and resistance. So I will not go too much into it. So we have the entry we have planned out already. So I will go for my TP somewhere around this area, somewhere around this area, and of course, when I put the TP at that area, I have taken this kind of trade many times in the past, where I will buy the support, and then I will TP at the resistance. For example, one of the trade setup that have something we took a similar trade is golden energy. Okay, so previously we took the trade here. And then we set the TP here, and eventually we hit the TP. So it is buy the rebound from support, then place your TP at previous resistance. But what you will see, how Wilmar is very different from golden energy, is that golden energy is, this is like in August, and this is, it reached the bottom in September, and now it has rebounded. But for Wilmar, the top was way back in January 2021. So it is a very long time, meaning if you want to hold until the price reach this profit level at 0.54, you are going to need a lot of holding power. You must learn how to hold. And if you look at the price movement, it is not a one straight line down. It is actually down, rest, down, rest, down, rest. So when it is going up, you will definitely be looking at up, rest, up, rest, up, rest. Or maybe even up, retrace a bit, up, retrace a bit, up. So if you get scared, or if you exit during this kind of retrace, right, most likely you are not going to be able to hold until this TP level. So once again, you do need to be very discipline in your trade plan, to follow your trade plan. If you ask, what if it just go up halfway like that and then it start to come back down all the way? And if that's the case, right, then of course, unfortunately, we could have never predicted that. Then we will definitely, of course, exit the trade, maybe at break even, or the moment we see price gone up until certain level, we will shift the stop loss to break even now. But this is once again a very big topic, and I'm not going to cover within this particular video. Of course, the TP strategy, shifting or stop loss, everything are course only. They are only for those who come for my course, and I teach them how to shift your stop loss properly. So it definitely will not be covered in this course. Covered in this video. So that's actually the end of my video. So I do hope that this video brings attention on this counter to you, and the fact that a lot of agricultural counters are actually rebounding, and hopefully we are able to find some gem within this very shitty market that we have. In fact, Wilmar is one of the, I would say, a rare counter on the STI constituent that actually I do like to trade. It is one of the counters that I will give a free pass lah. I don't really like to trade all the big counters on the STI constituent because the movement really suck. But it does seems that Wilmar can generate quite a good volatility for us to trade lah. Okay, so I do hope this video helps you in a bit of how to plan for this trade should you decide to take it, and hopefully we will be able to see some profit from this counter. So thank you very much for listening in. You may look at the description of the video for our Patreon or for our 3-month course if you are interested. Of course, if you are not interested, then I hope this video is enough to help you in your trading journey. Thank you very much.